It's surprising to me that 80% of Americans do not have a high yield savings account. This is a huge lost opportunity. So why should you have a high yield savings account? How do they work? And what is the best way to get one? That is the subject of this video. You've maybe heard the term lazy money or lazy cash. It's just cash that you have that's idle. It's sitting in your checking account or a bank savings account, and it's earning you next to nothing. And so this is really a lost opportunity. Now, a lot of times people feel like, well, I need this liquid money, easy to access. I need the liquidity. And so getting it set up to where it's earning more interest seems like it might be a little complicated, but I assure you it is not, and it's definitely worth it. And so you need your money to grow, right? If you've got money, that money can be working for you. Even if we're talking about checking account balances or savings account at your local bank. No, so we're not really talking about retirement accounts or investment accounts, right? It's just the money that you have in cash. And, everyone has different amounts of cash that they maintain, but whatever it is, it should be working for you. And you can get it working for you very easily and very safely. And that's what we're going to talk more about here. So inflation, as you know, it erodes your purchasing power. And so just to give you a couple of examples, right? So let's say we had an inflation rate of, let's say 3.5%. And let's say you have $20,000 of cash. In 10 years, what is the purchasing power on that cash? It's not 20,000, right? In that case, it'd be just a little bit over 14,000. Over 20 years, you're now you've lost half of your purchasing power. You've gone from your $20,000 sitting in cash, now can only buy $10,000 worth of goods and services. And so we need our money to grow or we're losing. And of course, there's investments and there's other things that should be part of everyone's plan. But how do we deal with just the cash? The money that's, you can't tie it up necessarily into investments. So high yield savings accounts. Now, you've probably heard of them. It's surprising that, there's only about 20% of Americans that are using high yield savings, which means 80% are not, right? And so I really hope that this video will make this easy for you. Now, when you look at different high yield savings, so most of the high yield savings are going to be from online banks. And so local banks with brick and mortar, they're not going to offer the same type of rates. You would have to put money into CDs, for example. Then you're making some commitment. You're kind of losing some of the liquidity, and it becomes more of a hassle to deal with because you need money in and out when you need it, right? But with a high yield savings account, you can very easily transfer money into where it's earning interest and very easily get it right back to when you need it to pay some bills. And so how do you set that up? If you look at a comparison, which I have done, looking at a lot of the different high yield savings account options that are out there, how do you choose what's the best one? Now, what I would suggest is you look for who's paying the highest interest rate and then go with them. Because, these are typically going to be around 5%, 4% nowadays that you can earn in high yield savings. I wouldn't make your decision on a 0.25% higher rate one place versus another. And the reason is because what are the terms? So some of these companies that will offer a little bit higher interest rate, they're going to have some minimum requirements, or they're going to have some monthly deposit requirements. And if you don't make those, then they might charge a fee. And so you just got to be careful of what the details are. So I've done the research, and I have one specific company that I recommend, and they've been really innovative. They've made it easy and very, very safe. So when we talk about safety, we're talking about FDIC insurance. Your account at the bank is going to be FDIC insured up to $250,000. And that can be an issue for many people. I know we have people that we see where, they have $250,000 at this bank, and then they have to go to another bank because they want that insurance, and they'll do $250,000 in another bank. and so on. But this company that I'm referring to here, this high yield savings account option, is through Flourish Cash. And they've done a really unique thing. They have many partner banks. And so you can have one high yield savings account and it can be insured all the way up to $6 million, FDIC insured. So much higher balances, all backed by the federal government and through that insurance program. So that's a big thing, because a lot of these online banks, it's just one bank, right? And so you're going to be capped at that 250. This is a big deal, not only for individuals, but for business owners. And, businesses, they tend to have a lot more cash because they're making payroll and they have a lot of lazy money not working for them. And this type of high yield savings account is thousands of dollars per year. I mean, it's a significant deal. And it's just money that you're just not taking advantage of. And so, as you can see here, up to $6 million FDIC insurance. If you had a joint account, now we're talking $12 million of FDIC insurance. And even a two-person household, it could be all the way up to $24 million FDIC insurance. So significant, kind of basically removed that limit for most people, for sure. So why do we have cash, and how much should we have, right? You want to have an emergency fund. So everyone should have 3 to 6 months of cash, and that cash should be earning interest, for sure. So the reasons why I like Flourish Cash, I'm going to tell you about Flourish. They have a competitive rate. Most of 2024, they were paying 5% interest. There are no minimums requirements. There are 0 fees to worry about, and it's 100% liquid. And it's FDIC insured. So it's really very safe. You're getting some nice interest. The Fed, in September, cut interest rates by 0.5%. And so they went from 5% down to 4.5%. And then again in November, they did a 0.25 percentage point cut. And so currently, as I'm making this video, the interest that's being offered through Flourish is 4.25%, which is a very strong, no risk option, right? But those interest rates will vary based on what's happening in the world with rates. Rates increase, it's going to pay out more. If rates cut, then it is reduced. The other thing I like about Flourish is unlimited transfers. So you connect it with your checking account at the bank, and there's no limit to transferring money in, transferring money out. And the beautiful thing is that transfers can be done on the same day. So in a single business day, you can take money that you have in your high yield savings and get it right into your checking account, ready to go. So it's very quick and accessible, which is a big improvement. Typically, in the past, you'd be looking at more like 3 days to get the money transferred. And now they've got it in 1 day, no fees, no transaction costs at all. So these accounts can be set up to where you schedule just when you want, you transfer some money, or you can set up a recurring schedule, a certain amount on a certain schedule that just automatically transfers in or out, however you want to do that. It's a very convenient way to go. And it's going to mean more money in your pocket, more money in your account. And depending on the size of your cash that you have, it can become very substantial. So if you look at my screen here, you can see kind of a graph of how it works. You have the money in your bank, you transfer it to your Flourish account. And these accounts, they're not ever going to be like IRAs or retirement accounts. We're talking individual accounts, joint accounts, trust accounts, or business accounts. You can have any of those, but we're talking about non-qualified savings account. Okay. Now, if you're dealing with, if you're thinking in terms of an IRA or Roth IRA, those or just an investment account, those are going to be handled differently. You can have cash options, right? You can have money markets and so forth inside of retirement accounts, but this type of account is not going to support retirement accounts. We're just talking about the cash. So who is Flourish? So Flourish is actually not an online bank, where many of the high yield savings type accounts are online banks. Flourish is not a bank, but what they do is they have partnered with many, they call them their partner banks. The money comes in, it gets distributed out or swept and held into these different banks so that you get that FDIC insurance up to 250, and however many banks you need, they're going to sweep it out. And so you get that insurance. It's all done for you behind the scenes. And this is a very strong, legit organization. So Flourish is wholly owned by MassMutual, which is a very large A-rated insurance company. Last year, they paid out, this is in 2023, they paid out $130 million in interest. So there's a lot of people taking advantage of Flourish, and I recommend it. The other unique aspect to Flourish is that you can't just go online and say, hey, I want a Flourish account. It's by invitation only. And so Flourish partners with firms like mine, financial firms, who then offer it. And so we actually have a special link, it's in the description of this video, where you can click and you can essentially, through us, you can invite yourself. You just put in your name and email address. It'll send you an email where you have the instructions, and it's very easy to set up your Flourish account. You want your money to work for you. There's money just waiting to grow into your savings account. These accounts can be excellent for not only emergency funds, right? Saving for a trip. There's just countless reasons why, short-term savings, right? We're not talking about long-term type investment accounts. It's your short-term savings. Don't let it just sit there idle. Get some interest, and it's really, really easy to do. So hope you found this beneficial. Check out the link in the description below. You can also visit us, financialfastlane.com, for more information. And I look forward to seeing you in the next episode of the Financial Fast Lane.